Hey guys, today I want to share with you an important lesson that I learned from my recent investing experience, and that will be the benefit of investing in great businesses. We will do this through a case study of my recent investment in CapitaLand. So in case you are situated overseas, this company is actually listed in Singapore. So it's one of the most reputable real estate companies here. In fact, it has a strong presence in Asia. Its operations is huge, ranging from property development to property management, including investment fund management of real estate assets and many real estate investment trusts under its arms. I'm not going to go into the details of the financials and businesses of the company, but long story short, I bought into the company during the COVID-induced market correction in 2020 at an average price of about $2.80 per share. I would say that on average, it trades at around $3.50 in a pre-pandemic period, so meaning that I was expecting more than 25% upside based on my entry price once the market recovers. So given the great business and strong track record it has, it's a pretty decent return. And sure enough, the share price started to recover to the average trading price range. But what's the cool part about this, which is also the gist of my today's sharing, is that thereafter, management announced a restructuring plan. The idea is to unlock value for its shareholders. They propose to privatize their property development business and separately list their real estate investment management business on the exchange. Because real estate developers generally trade at a lower multiples than real estate investment managers. Again, I will not delve into the details of the reasons here, but understand that CapitaLand's share price was trading at a multiples between a typical developer and a typical real estate investment manager. By decoupling and privatizing its development arm, management can unlock value for its shareholders, since its real estate investment management can now close the gap with pure play real estate investment managers on the market and start to trade at higher value. The proposed transaction will result in shareholders getting three components of the deals for each share you own. First will be the shares of a listed real estate investment trust, CapitaLand Integrated Commercial Trust, that the company has shares in. Second will be the cash payout. And thirdly, we will get a share of the newly restructured company, Capitalnd Investment, at $2.82 a share. All in all, we will get an implied consideration of $4.10 for each of the share of original stock that we own. As a result, the original CapitaLand share price jumped 20% post the announcement of the proposed restructuring plan back in March 2021. Now here come the essence. The newly formed company CapitaLand Investment's share price is pegged to the equivalent of its net asset value at $2.82, meaning at $2.82, its price to net asset value is equals to 1. But remember, from the chart we've seen previously, comparable real estate investment managers generally trade at around 2.5 times to 2.9 times net asset value. See the value gap here. If CapitaLand Investment eventually trades at just 2 times price to net asset value, we will be looking at a 100% upside from our given price. And you can see that the market has started to recognize and react to this value gap since the listing of the new CapitaLand Investment shares on 20th September 2021. Supposedly listed at $2.82, it has since climbed about 25% to about $3.50 in a matter of a week. So if you are calculating, my investment in the original CapitaLand at an average price of around $2.80 had already made more than 40%, with its price climbing towards the implied consideration of around $4.10. Now, my portion of the new CapitaLand investment had climbed another 25% in a one-week window since the listing in the exchange. As you see previously, the value gap still exists, and CapitaLand holds comparably strong assets, so I believe the value gap can be closed, so there's potentially more upside. So there we are. I wouldn't claim that I would have known that this would happen, but with the great assets and knowledgeable management the company has, this unlocking of value created further upside for me came as a pleasant surprise. In fact, this reminds me of the importance of investing in great businesses and management, which is the key lessons that I want to share with you all today. Because you never know what kind of wonderful things great businesses can do. Sometimes it's just beyond the numbers that we can read on the financial reports. Anyway, hope you have learned something today. Appreciate if you can give us a thumbs up and subscribe to the channel for more updates, and I'll see you next time.